Hi, I'm Jessica Amir for the Finance News Network, and with me today from Concentrated Leaders Fund is Dr David Sokulsky. Dr Sokulsky, welcome to the network.
Thank you.
So first up, David, just give us an introduction to the listed investment company.
It's actually 30 years old. The company was founded by Equity Link back in 1987. So it's actually one of the longest running LICs or funds management business in Australia. So I took it over at the start of 2018. One of the original founders is still the chairman and largest shareholder. But we decided to, or the board decided to internalise the management at the start of last year, with the reason being that we wanted to really grow the fund or the company. It really was being pretty stable in terms of its asset size for over a decade. So, the opportunity's there to grow it. So we brought in a team to grow that and to manage the funds.
So before we talk about the fund, maybe you can tell us your definition of a concentrated fund and how you also manage risk with your concentrated fund.
We consider concentrated to be about 30 stocks. So give or take a couple either side. That's where we think that we can add real value. We're not following the benchmark, so we're taking considerable risk away from where the benchmark is, and what that means is we've got to manage risk appropriately. For us, that's done in two ways. One, position sizing, so we have a maximum of 7.5% in any one position, and also risk budgeting. So we like to limit the contribution to risk of any one position to be 10%, and that's based on standard deviation and beta of that individual position. So we think between those two things, we can have a portfolio which adds alpha, but which also negates some of those risks in terms of concentration. And
how has your approach and style flow through to the underlying portfolio in terms of your largest holdings and your sector exposure?
Yeah, we try and have a diversified portfolio from a sector perspective. And that really means not taking too much risk in any one sector. And the most obvious in Australia is if you buy an index fund, you're overweight the banks, relative to what I'd say our economy is. So for us, that generally means being underweight financials, underweight materials, and then looking at where the best opportunity set is amongst the other sectors. And at the moment, we find technology to be a very attractive sector, and we find consumer discretionary to be very attractive as well. Important to point out with consumer discretionary, it's a very broad category. So the difference between, say, an A2 milk, which is focused on China and baby formula, versus, say, an Aristocrat, which is based on the US and technology, are key to the way we look at, again, risk and the portfolio. So we don't necessarily look at sector as much, but we look at where the risk is being taken and what macro factors we're vulnerable to.
Maybe you can tell us some of your largest positions.
Sure, so we've got Macquarie Group at CSL as our two largest positions, and we think they're two of the highest quality companies in Australia, obviously sourcing a lot of their revenue from offshore and being able to deliver consistent cash flows. Outside of that, our next sort of three largest are BHP, CBA and Transurban. And again, we are sort of looking at what are the biggest companies which are, delivering what they need to shareholders, and which are delivering consistent cash flows. So again, while companies like CBA and the rest of the banks may have some issues, we think those three companies in particular are delivering very consistent cash flows to their shareholders, and that's what we like.
And the Concentrated Leaders Fund, how has that been performing?
Since I took over at the start of 2018 calendar year, we outperformed by about 1.77%, which is quite encouraging given the volatility we saw at the end of the year. And then at the start of this year, we've got the numbers up until the end of February, and thankfully we're outperforming up until the end of February as well. March has been a bit of a rougher month, but we don't have the final numbers yet.
And now to the outlook, what are some of the major factors that you're seeing at play?
Look, I'm still very positive on domestic equities over the medium term and longer term, but I think in the short term there's a number of risk factors which we need to be considerate of, and certainly the upcoming election is one of them. How the US and China resolve their trade issues is another one. And obviously the property market in Australia is a third one, which we want to see some kind of resolution in before we get too positive on the investment environment. So at the moment we're sitting on about 20% cash, just being prudent in terms of waiting for that opportunity or until we get a bit more clarity on some of those risks.
Dr David Sokulsky from Concentrated Leaders Fund, thank you so much.
Thank you.